The Carlyle Group is an American multinational private equity, alternative asset management and financial services corporation. As one of the largest private equity and alternative investment firms in the world, Carlyle specializes in four key business areas: corporate private equity, real assets, global market strategies, and investment solutions. Carlyle's corporate private equity business has been one of the largest investors in leveraged buyout transactions over the last decade, while its real estate business has actively acquired commercial real estate. Since its inception, Carlyle has at various times had investments in companies such as Booz Allen Hamilton, Dex Media, Dunkin Brands, Freescale Semiconductor, Getty Images, HCR Manor Care, Hertz, Kinder Morgan, Nielsen, and United Defense. Carlyle was founded in 1987 in Washington, D.C. by William E. Conway, Jr., Daniel A. D'Angelo, and David Rubenstein, and currently operates with more than 1,700 employees across 35 offices in North America, South America, Europe, the Middle East, Africa, Asia, and Australia. Over the course of 2 decades, Carlyle has amassed a portfolio of $193 billion in assets under management across 130 funds and 156 fund-of-fund vehicles, and has made investments in more than 200 companies and more than 250 real estate investments. In 2012, Carlyle completed a $700 million initial public offering and began trading on the Nasdaq Stock Exchange on May 3, 2012, according to a 2015 ranking called the Pay 300 based on capital raised over the last 5 years. Carlyle was ranked No. 1 as the largest private equity firm in the world. Business segments. The firm is organized into 4 business segments: corporate private equity, management of Carlyle's family of private equity funds investing primarily in leveraged buyout and growth capital transactions through a range of geographically focused investment funds; real assets, management of Carlyle's family of energy and real estate investment funds focusing on the US, Europe, and Asia; global market strategies, management of various credit, equities, and hedge fund vehicles with over $37 billion in assets under management; and investment solutions, management of 3 investment groups: corporate private equity, real estate, and liquid market solutions, which invest in primary, secondary, and co-investments, commingled funds, and separately managed accounts. Corporate private equity. Carlyle's corporate private equity division manages a series of leveraged buyout and growth capital investment funds with specific geographic or industry focuses. Carlyle invests primarily in the following industries: aerospace, defense and AMP, government services, consumer and AMP, retail, energy, financial services, healthcare, industrial, real estate, technology and business services, telecommunications, and AMP, media and transportation. Carlyle began investing in corporate private equity in 1990 and since inception has invested $62.5 billion of capital in 497 investments. As of March 31, 2015, Carlyle managed 32 active funds with $64 billion in assets under management consisting of buyout funds. Carlyle manages a group of 22 active funds with approximately $58 billion in assets under management as of March 31, 2015. Growth capital funds. Carlyle manages 10 active growth capital funds with approximately $5 billion in assets under management as of March 31, 2015. Real assets. Carlyle's real assets division manages 28 active investment funds focused on real estate, natural resources and energy. The real assets business has three primary areas of focus. Real estate funds. Carlyle manages 9 active real estate funds with approximately $14 billion in assets under management as of March 31, 2015. Natural resources. Carlyle manages 14 natural resources funds with more than $20 billion in assets under management as of March 31, 2015, including 10 funds advised by Carlyle Energy affiliate NGP Energy Capital Management, 1 infrastructure fund, 2 power funds, and 1 international energy fund. Legacy Energy. Through its joint venture with Riverston Holdings, Carlyle manages 5 active funds with more than $9 billion in assets under management as of March 31, 2015. Global Market Strategies. Carlyle's Global Market Strategies division manages 57 investments across a range of investments including credit, emerging markets, macroeconomic strategies, commodities trading, leveraged loans, structured credit and mezzanine debt. As of December 31, 2012, the Global Market Strategies division had $33 billion of assets under management across several strategies. Structured credit funds. Carlyle manages 43 investment funds, including CLO with approximately $17 billion in assets under management as of December 31, 2012. Distressed and corporate opportunities. Carlyle manages 3 funds focused on investments in distressed debt, with approximately $2 billion in assets under management as of December 31, 2012. Mezzanine. Carlyle manages 2 funds focused on mezzanine debt investments in middle-market companies with approximately $700 million in assets under management as of December 31, 2012. Carlyle also manages a fund focused on mezzanine debt investments in energy and power projects in North America with $1 billion of assets under management as of December 31, 2012. Long-short credit. Carlyle's Claren Road Asset Management subsidiary manages 2 hedge funds focused on credit investments with approximately $7 billion in assets under management as of December 31, 2012. Emerging markets and macroeconomic strategies. Carlyle's Emerging Sovereign Group subsidiary manages 7 hedge funds with approximately $3 billion in assets under management as of December 31, 2012. Commodities. Carlyle's Vermilion subsidiary manages 3 investment funds with approximately $2 billion in assets under management as of December 31, 2012. Investment Solutions. Alpinvest Partners is one of the largest private equity investment managers globally with over $49 billion under management as of March 31, 2015, invested alongside more than 250 private equity firms. Founded in 1999, Alpinvest has historically been the exclusive manager of private equity investments for the investment managers of 2 of the world's largest pension funds, Stichting Pensioenfonds ABP and Stichting Pensioenfonds Organwelzijn, both based in the Netherlands. In 2011, Carlyle acquired Alpinvest and has integrated the business, including its leading fund of funds and secondary platforms, significantly expanding Carlyle's global asset management business. Alpinvest pursues investment opportunities across the entire spectrum of private equity including large buyout, middle market buyout, venture capital, growth capital, mezzanine, distressed and sustainable energy investments. Alpinvest has offices in New York City, Amsterdam and Hong Kong with over 75 investment professionals and over 130 employees. Carlyle's real estate fund of funds group is called Metropolitan which provides investors with access to multi-manager real estate funds and solutions with more than 85 fund managers in the United States, Europe, Asia and Latin America. Metropolitan constructs and manages U.S. non-U.S. and global real estate portfolios, which include primary and secondary fund interests as well as co-investments. DGAM is Carlyle's liquid solutions team. DGAM provides investors access to an array of proprietary and third-party hedge funds around the world. DGAM works to manage the complexities of alternative asset classes with a complementary blend of investment and operations expertise. History. Founding and early history. Carlyle was founded in 1987 as an investment banking boutique by 5 original partners with backgrounds in finance and government: William E. Conway, Jr., Stephen L. Norris, David M. Rubenstein, Daniel A. Daniello and Greg Rosenbaum. The founding partners named the firm after the Carlyle Hotel in New York City, where Norris and Rubenstein had often met to discuss the formation of the new investment business. Rubenstein, who was a Washington-based lawyer, had worked in the Carter administration. Norris and Daniello had previously worked together at Marriott Corporation, while Conway was a finance executive at MCI Communications. Of the founding 5 partners, Rubenstein, Conway and Daniello remain active in the business, while Rosenbaum left in the first year and Norris departed in 1995. Carlyle was founded with $5 million of financial backing from T. Rowe Price, Alex. Brown and Amp Sons, First Interstate Equities, and the Richard King Mellon family. In the late 1980s, Carlyle raised capital on a deal-by-deal basis to pursue leveraged buyout investments, including a failed takeover battle for Kai Cheese. The firm raised its first dedicated buyout fund with $100 million of investor commitments in 1990. In its early years, Carlyle also advised in transactions including a $500 million investment by Prince Al-Walid bin Talal, a member of the Saudi royal family, in Citigroup in 1991. Carlyle initially developed a reputation for acquiring businesses related to the defense industry. In 1992, Carlyle completed the acquisition of the electronics division of General Dynamics Corporation, renamed GDE Systems, a producer of military electronics systems. Carlyle would later sell the business to Tricor in October 1994. Carlyle acquired Magnavox Electronic Systems, the military communications and electronic warfare systems segment of Magnavox, from Philips Electronics in 1993. Carlyle sold Magnavox for approximately $370 million to Hughes Aircraft Company in 1995. Carlyle also invested in Vought Aircraft through partnership with Northrop Grumman. Carlyle's most notable defense industry investment came in October 1997 with its acquisition of United Defense Industries. The $850 million acquisition of United Defense represented Carlyle's largest investment to that point. Carlyle was able to complete an IPO of United Defense on the New York Stock Exchange in December 2001, selling a significant portion of its interest in the company. Carlyle completed a sale of its remaining United Defense stock and exited the investment in April 2004. In more recent years, Carlyle has de-emphasized its focus on defense industry investments. Carlyle's 2001 investor conference took place on September 11, 2001. In the weeks following the meeting, it was reported that Shafiq bin Laden, a member of the bin Laden family, had been the guest of honor, and that they were investors in Carlyle-managed funds. Later reports confirmed that the bin Laden family had invested $2 million into Carlyle's $1.3 billion Carlyle Partners II fund in 1995, making the family relatively small investors with the firm. However, their overall investment might have been considerably larger, with the $2 million committed in 1995 only being an initial contribution that grew over time. These connections would later be profiled in Michael Moore's Fahrenheit 9/11. The bin Laden family liquidated its holdings in Carlyle's funds in October 2001, just after the September 11 attacks, when their connection of the family name to the Carlyle Group's name became apolitic. 2002 to 2006. Following the collapse of the dot-com bubble in 2000 and 2001, buyout activity declined significantly, marked by the two-stage buyout of Dex Media at the end of 2002 and 2003. Large multi-billion-dollar U.S. buyouts could once again obtain significant high-yield debt financing, and larger transactions could be completed. Carlyle, together with Welsh Carson, Anderson and Amp Stowe, led a $7.5 billion buyout of QuestDex. The buyout was the third largest corporate buyout since 1989. QuestDex's purchase occurred in two stages: a $2.75 billion acquisition of assets known as Dex Media East in November 2002 and a $4.30 billion acquisition of assets known as Dex Media West in 2003. H. Donnelly Corporation acquired Dex Media in 2006. Shortly after Dex Media, other larger buyouts would be completed, signaling the resurgence in private equity was underway. Lou Gerstner, a former chairman and CEO of IBM and Nabisco, was appointed chairman of Carlyle in January 2003, replacing Frank Carlucci. Gerstner would serve in that position through October 2008. The hiring of Gerstner was intended to reduce the perception of Carlyle as a politically dominated firm. At the time, Carlyle, which had been founded 15 years earlier, had accumulated $13.9 billion of assets under management and had generated annualized returns for investors of 36%. Carlyle also announced the $1.6 billion acquisition of Hawaiian Telcom from Verizon in May 2004. Carlyle's investment was immediately challenged when Hawaii regulators delayed the closing of the buyout. The company also suffered billing and customer service issues as it had to recreate its back-office systems. Hawaiian Telcom ultimately filed for bankruptcy in December 2008, costing Carlyle the $425 million it had invested in the company. As the activity of the large private equity firms increased in the mid-2000s, Carlyle kept pace with such competitors as Kohlberg Kravis Roberts, Blackstone Group, and TPG Capital. In 2005, Carlyle, together with Clayton Dubilier and Amp Rice and Merrill Lynch, completed the $15 billion leveraged buyout of the Hertz Corporation, the largest car rental agency from Ford. The following year, in August 2006, Carlyle and its Riverston Holdings affiliate partnered with Goldman Sachs Capital Partners in the $27.5 billion acquisition of Kinder Morgan, one of the largest pipeline operators in the U.S. The buyout was backed by Richard Kinder, the company's co-founder and a former president of Enron. In September 2006, Carlyle led a consortium, comprising Blackstone Group, Permira and TPG Capital, in the $17.6 billion takeover of Freescale Semiconductor. At the time of its announcement, Freescale would be the largest leveraged buyout of a technology company ever, surpassing the 2005 buyout of SunGard. The buyers were forced to pay an extra $800 million because KKR made a last-minute bid as the original deal was about to be signed. Shortly after the deal closed in late 2006, cell phone sales at Motorola Corp., Freescale's former corporate parent and a major customer, began dropping sharply. In addition, in the recession of 2008-2009, Freescale's chip sales to automakers fell off, and the company came under great financial strain. Earlier that year, in January 2006, Carlyle, together with Blackstone Group, AlpInvest Partners, Hellman and Amp, Friedman, Kohlberg Kravis Roberts and Thomas H. Lee Partners, acquired Nielsen Company, the global information and media company formerly known as VNU, in an $8.9 billion buyout. Also in 2006, Carlyle acquired Oriental Trading Company, which ultimately declared bankruptcy in August 2010, as well as Forber Dental Management, the owner of Small Smiles Dental Centers, the largest U.S. chain of dental clinics for children. Since 2007, on January 28, 2007, the Carlyle Group purchased Synagro Technologies, a municipal sludge hauler and spreader, for $5.76 per share. Carlyle continued to make large investments into 2007 as the buyout market reached its peak. In June 2007, Carlyle agrees to acquire HD Supply for $10.3 billion, along with Bain Capital and Clayton, Dubier and Amp. Rice. Home Depot sold the wholesale construction supply business to fund a stock repurchase estimated at $40 billion. Also in June 2007, Carlyle announced that it would partner with Onags Corporation to buy the Allison transmission unit from General Motors for $5.6 billion. On December 18, 2007, David Rubenstein, representing the Carlyle Group, purchased the Magna Carta at Sotheby's auction house in New York City. He paid the Perot Foundation $21.3 million. Mr. Rubenstein expressed his intent for it to be returned to the National Archives for display. On May 16, 2008, Booz Allen Hamilton announced that it would sell a majority stake in the U.S. government business to the Carlyle Group for $2.54 billion. The transaction was expected to be complete July 31, 2008. In November 2008, the Carlyle Group was named Private Equity Firm of the Year in the U.S. at the Financial Times Merger Market 2008 M&A Awards. In March 2009, New York state and federal authorities began an investigation into payments made by Carlyle's Riverston Holdings subsidiary to placement agents, allegedly made in exchange for investments from the New York State Common Retirement System, the state's pension fund. In 2000, Carlyle had entered into a joint venture with Riverston Holdings, an energy and power-focused private equity firm founded by Pierre F. Lapin, Jr. and David M. Loishan. It was alleged that these payments were in fact bribes or kickbacks made to pension officials who have been under investigation by New York State Attorney General Andrew Cuomo. In May 2009, Carlyle agreed to pay $20 million in a settlement with Cuomo and accepted changes to its fundraising practices. On October 16, 2009, Carlyle Group bought Metaldyne, Airline, a global automotive components supplier. On November 30, 2009, David Rosenthal, a Synagro executive, was sentenced for conspiring to commit bribery in the corruption scandal which eventually brought down the mayor of the city of Detroit. The executive for the Carlyle subsidiary was caught giving cash to Detroit city leadership. On September 30, 2010, Carlyle Group announced the completed acquisition of nutritional supplement manufacturer NBTY for $4 billion. On September 4, 2011, the carpet manufacturer Brinton's announced that it had been acquired by the Carlyle Group. On October 3, 2011, the pharmaceutical contract research organization PPD announced that it had been acquired by the Carlyle Group. In August 2012, Carlyle Group announced that it would purchase DuPont Performance Coatings for $4.9 billion in cash. DPC is a global supplier of vehicle and industrial coating systems. The transaction closed in the first quarter of 2013 and the new company was named Axalta Coating Systems. In October 2012, Carlyle Group sold its remaining 3.7% stake in Housing Development Finance Corporation for around $841 million. In November 2012, the Carlyle Group unveiled the first investment of its new Sub-Saharan African fund. Carlyle is part of a small group of investors that will inject $210 million into Export Trading Group, a Tanzania-based agricultural company that sources commodities from Africa's small farmers and sells those goods to China, India and elsewhere. January 2013, Carlyle Group began talks to sell Synagro after plowing over $500,000 in 2012 to keep the entity afloat. April 23, 2013, Carlyle Group's subsidiary, Synagro Technologies, filed for Chapter 11 bankruptcy, and in lieu of sale, a reorganization and sale of the company to an affiliate of Swedish private equity firm EQT. The offer price was set at $460 million, over $300 million less than what Carlyle Group originally purchased the entity for in 2007. In September 2013, it was announced that Carlyle Group has purchased a minority stake in Beats Music for $500 million. This came as technology firm HTC liquidated the 24.84% stake in Beats for $265 million. In February 2014, the Carlyle Group acquired Diversified Global Asset Management, a manager of hedge funds with more than $6.7 billion United States dollars in managed and advised assets. Equity for the transaction came from Carlyle's balance sheet. DGAM became Carlyle's fund of hedge funds platform, and George Main and Warren Wright continued in the roles as CEO and CIO, respectively, managing investments in the day-to-day operations of DGAM. In February 2014, Carlyle entered into exclusive talks with Tyco International to acquire its South Korean security systems unit, valued at around $2 billion. On March 3, 2014, Carlyle announced it had reached a deal with Tyco to purchase its South Korean security business for approximately $1.9 billion in cash. In March 2014, Carlyle acquired ECI Software Solutions, a business management and e-commerce software company. In June 2014, Carlyle announced that it had raised $1 billion for financial company investing. In July 2014, Carlyle Group LP sold a London property to Blackstone Group for $514 million. In September 2014, Carlyle Group closed its fourth Asia fund at $3.9 billion. It is the second largest private equity fund ever raised for Asia investments. In October 2014, Carlyle announced it would acquire a controlling stake in 6 power plants in the southeastern U.S. state of Georgia worth $2 billion. In December 2014, Carlyle Group announced its chief accounting officer Curtis Buser would become the company's next chief financial officer. In August 2015, Carlyle acquired Symantec's data storage business, Veritas Software, for $8 billion. In September 2015, Carlyle Group, along with the Chertoff Group, acquired a majority stake in Coalfire Systems, a global cybersecurity and technology services provider specializing in cyber risk advisory, compliance assessments, technical testing and software services for private enterprises and government organizations. In September 2015, Carlyle acquired a 51% stake in PA Consulting. In November 2015, Carlyle Group acquired a majority stake in Brazilian specialized assistance provider Tempo Participacos for an undisclosed sum. Ownership changes. For the first 25 years of its existence, Carlyle operated as a private partnership controlled by its investment partners. In 2001, the California Public Employees Retirement System, which had been an investor in Carlyle-managed funds since 1996, acquired a 5.5% holding in Carlyle's management company for $175 million. The investment was valued at approximately $1 billion by 2007 at the height of the 2000s buyout boom. In September 2007, Mubadala Development Company, an investment vehicle for the government of Abu Dhabi of the United Arab Emirates, purchased a 7.5% stake for $1.35 billion. In February 2008, California legislators targeted Carlyle and Mubadala, proposing a bill that would have barred CalPERS from investing money with private equity firms that are partly owned by countries with poor records on human rights. The bill, which was intended to draw attention to the connection between Carlyle and Mubadala Development, was later withdrawn. In May 2012, Carlyle completed an initial public offering of the company, listing under the symbol CG on the Nasdaq. The firm, which at the time managed approximately $147 billion of assets, raised $671 million in the offering. Following the IPO, Carlyle's 3 remaining founding partners, Rubenstein, Daniello and Conway, retained the position as the company's largest shareholders. Subsidiaries and joint ventures. Carlyle has been actively expanding its investment activities and assets under management through a series of acquisitions and joint ventures. Carlyle Capital Corporation. In March 2008, Carlyle Capital Corporation, established in August 2006 for the purpose of making investments in U.S. mortgage-backed securities, defaulted on about $16.6 billion of debt as the global credit crunch brought about by the subprime mortgage crisis worsened for leveraged investors. The Guernsey-based affiliate of Carlyle was very heavily leveraged, up to 32 times by some accounts, and it expects its creditors to seize its remaining assets. Tremors in the mortgage markets induced several of Carlyle's 13 lenders to make margin calls or to declare Carlyle in default on its loans, in response to the forced liquidation of mortgage-backed assets caused by the Carlyle margin calls and other similar developments in credit markets. On March 11, 2008, the Federal Reserve gave Wall Street's primary dealers the right to post mortgage-backed securities as collateral for loans of up to $200 billion in Higher grade U.S. government-backed securities. On the 12th of March 2008, BBC News Online reported that, instead of underpinning the mortgage-backed securities market, it seems to have had the opposite effect, giving lenders an opportunity to dump the risky asset, and that Carlyle Capital Corp. will collapse if, as expected, its lenders cease its remaining assets. On March 16, 2008, Carlyle Capital announced that its Class A shareholders had voted unanimously in favor of the corporation filing a petition under Part 16, Sec. 96, of the Companies Law of Guernsey for a compulsory winding up proceeding to permit all its remaining assets to be liquidated by a court-appointed liquidator. The losses to the Carlyle Group due to the collapse of Carlyle Capital are reported to be minimal from a financial standpoint.